Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right, let's get to geopolitics. Ukrainian President Volodymyr Zelenskiy unexpectedly canceled his visit to Saudi Arabia after he was shut out of talks there between the United States and Russia on the future of his country. The discussions between the top U.S. and Russian officials today only fueling concerns about a rapid push for a deal by the two powers that may ultimately leave Europe, Tim, on the sidelines.
In the meantime, the U.S. and Russia signaled a determination to remove sanctions imposed over Putin's invasion of Ukraine. This is part of talks to end the conflict. Carol, it opens up another point of tension with European allies that want the restrictions to remain in place.
We knew we wanted to hear from Angela Stent. Dr. Angela Stent is back with us. She's senior fellow at the Brookings Institution. She's a member of the Council on Foreign Relations, a former national intelligence officer for Russia and Eurasia at the National Intelligence Council. And earlier, she was in policy planning at the U.S. Department of State. She's professor emerita of government and foreign service at Georgetown University. And she is the author of Putin's World, Russia Against the West and with the Rest. So she is the perfect guest to talk to. She does join us from Washington, D.C. Dr. Stent, great to have you here once again with us. Is this, in terms of what we are hearing from allies, European allies of the United States, from Russia, from the U.S., from Ukraine, is this how you anticipated moves toward ending the Russia-Ukraine war to look like?
I suppose, well, thank you for having me on again. I suppose that, listening to what President Trump was saying on the campaign trail, one could have assumed that this might happen, but it's happening so quickly. And I think the exclusion of the Europeans, the exclusion of President Zelensky and the Ukrainians, is just the rapidity with which this is happening. And I also, I guess, didn't realize there'd be so much emphasis on the economic side of it, because we had Steve Witkoff was in the room in Riyadh, and then Kirill Dmitriev, close to Putin, head of the Russian Sovereign Wealth Fund, and clearly they were talking about business deals. Mr. Witkoff was in Russia a couple of weeks ago, freeing Mark Fogel, the U.S. Teacher who was in prison. So I think there are dimensions to this which maybe one didn't think about beforehand. But what the emphasis today was so much on restoring U.S.-Russian ties. While this war is raging, the Russians were bombing the Ukrainians as this was happening. So Ukraine was kind of a sideshow today.
It's really challenging to sort of think about where we've come in a few years, but also in such a short time. I'm wondering about the message that you have for the United States right now and the message that you have for Europe. What do Europeans need to understand and what do Americans need to understand if a peace deal includes part of Ukraine going to Russia?
So, the Europeans were shocked this weekend at the Munich Security Conference when Vice President Vance lectured them on their lack of democracy and freedom of speech and met with the head of the extreme right-wing German party competing in the elections this weekend and did not meet with the chancellor. But in general, I think Europeans were shocked, and they realized that this could be the beginning of the U.S. departure from Europe, something that, President Trump and some of the people around him have hinted before. And that means if they don't want this war to continue or Putin to invade again, they have to spend much more in defense, and they have to step up and fill the void because the U.S. has already said it's not going to be involved, for instance, in peacekeeping after this war is over, presuming that it is. And I think for Americans, I think they just have to understand we are now entering a completely new era. For 80 years, the Transatlantic Alliance was the anchor of U.S. power in the world, of the U.S. presence in the world. We did a lot of very important and positive things for our allies, also our Asian allies, and that's probably coming to an end as well.
Right, and kept peace, right, for a long time here, coming off of World War II. Having said that, I think sometimes it's safe to say that Americans have enough struggles, either trying to figure out putting food on the table, dealing with inflation still. Why is it important, though, for the broader American public if the NATO alliance doesn't exist anymore?
If the NATO alliance doesn't exist, then I think the possibility of more large-scale wars in Europe. I mean, particularly Russia's ambitions, if it's able to rebuild its economy and rebuild its military, is there. And all I can say is twice in the 20th century, the U.S. had to intervene in a European war because in the end, that can also adversely affect the U.S. We're not an island. We really aren't. And I think what the U.S. public has to understand is that, yes, we did give Ukraine large sums of money to support it, but most of that money went to U.S. manufacturers. It's people in the U.S. who were making weapons and other things that we then exported to the Ukrainians. So I think there's been a lack of a very accurate information about what these funds involved.
Dr. Stent, what would you say to somebody who's watching right now, who's listening right now and says, wait a second, to a certain extent, we are an island here in the U.S. As President Trump has said, there is an ocean that separates us from that part of the world. Not so much in Europe. What is the U.S.'s interest in protecting Ukraine? That is a question that a lot of Americans have been asking. It's a question a lot of politicians have been asking too.
Well, again, if we don't help Ukraine, then what Putin will do is he'll take over Ukraine, but he won't stop there. He has broader ambitions. We've discussed this before on this show. He wants to revise the whole post-Cold War settlement. He wants to reestablish Russian influence and control over the former Soviet states and over parts of Eastern Europe. And in conjunction with China, these are two countries who essentially want to make the world safe for authoritarian governments. Now, if the U.S. public, and I understand some of them don't care about whether they live in a democracy with freedom of speech and all of those things that we take for granted and the rule of law, then maybe it doesn't matter. But for those who care about that, allowing Russia to prevail in conjunction then with China, it's a very different future for the U.S.
You know, Dr. Stent, one of the things I feel like many say about this administration is that there's a lot coming out of the White House, out of Washington, and yet it's like shiny stuff over here, and yet there's some really important stuff going on over here. And I feel that sometimes plays out in diplomatic relations. Is there anything potentially going on behind the scenes that the headlines aren't picking up when it comes to Ukraine and Ukraine having a say in all of this?
There may well be. I think at the moment we're in the stage, it's the beginning of an administration. We have a president who says lots of different things, partly, I think, to shock people, but he doesn't always act on all of them. But right now, I think he's trying to show that he is. So there may be behind the scenes things going on. We do know that there was this proposal for the U.S. or the Ukrainians to give the U.S. essentially 50% of its rare earth and its minerals that the U.S. would control. That's something that so far the Ukrainians have rejected, but there might be some deal going on there. So, and we do have General Kellogg, who is one of the people supposed to be negotiating this, who is in Kiev, going to Kiev, and may have different conversations with the Ukrainians. So I'm sure there are other things going on that we don't know about.
I ask you every time you come on our program, Dr. Stent, how you think it's going to end. We've been having this conversation for years at this point.
For years.
But a lot has happened.
I don't know. I mean, I still think if the war comes to an end, Ukraine will have to make some territorial concessions. That's clear. But what I don't know is whether it will be able to get the kind of security guarantees it needs to fend off or to deter another Russian attack. And the Europeans want to do this, but they're going to have to spend more money on defense. It's not clear that the U.S. under this administration wants to be involved in it. So that's why it's very hard to predict.
You just said something that's particularly concerning. You said, if this war ends. Did you mean to say that?
I did, because I don't think Putin has any interest in ending the war right now. And I think, you know, the Ukrainians are having a tough time on the battlefield. I mean, so are the Russians. They're losing, 1,000, 1,200 men a day. But still, I think Putin is willing to continue this because until he believes that Russia has won, and that would mean regime change in Ukraine and a Ukraine that was really subordinate to Russia.
Dr. Stent, what do you think is the relationship between President Trump and President Putin, really? Is it one of admiration equally on each side? Is it, I don't know, how do you see it? Someone who understands President Putin, you've written about him, studied him, but I'm just curious what your take is on their relationship.
Well, I do think that President Trump admires President Putin because he has said so, and I think he believes he has a good relationship with him. From Putin's point of view, don't forget, this is a former KGB case officer. He wants the legitimacy of being recognized as an equal with the United States. He much prefers dealing with President Trump than, a President Biden or President Obama. In general, he prefers dealing with Republicans, but dealing with President Trump because he knows that President Trump wants to have a better relationship with Russia. So I think I will stop there because, of course, I don't know what's in either of these men's heads.
What do you think, though, in terms of President Zelensky? This has got to be a difficult spot for him to be in at this point. Who are his strongest allies in Europe at this point?
So his strongest allies in Europe are Poland. They're the three Baltic states, because all of these countries know what it's like to be invaded and sort of crushed by Russia or the Soviet Union. The British are strong allies. They have said, Prime Minister Keir Starmer has said that Britain will send troops to Ukraine if an agreement is reached. I would say France is a pretty strong supporter. Germany is to some extent, but it's much more reticent about getting militarily involved. And Italy is, under Prime Minister Meloni. She's been a very strong supporter. There are other countries like Hungary, like Slovakia, like Spain, like Greece, who are less supportive. So Europe is not united on this.
Dr. Stent, forgive me for putting you in this position, but I've been wanting to figure out a way we could play this out, because the president for a long time on the campaign trail, and he's indeed repeated this from the Oval Office over the last few weeks, that this war never would have happened had he been president during Biden's term. Do you believe that sentiment? Do you agree with that sentiment?
Well, all I know is that Putin has been planning this war for some time. If you talk to people former advisors of his, if you read what he was writing, if you look at what he was doing, he didn't plan this war when President Biden came to power. He planned it long before then, and he seized on the moment to invade in February of 2022 for a number of reasons, one of which was certainly when he looked at the U.S. withdrawal from Afghanistan, and he believed that the U.S. would not respond very strongly to what he did. And of course, he was wrong then. So I would have difficulty accepting that claim at face value.
One of the other things I think about, this idea of the relationship between President Putin and President Trump, the idea of keep your friends close, keep your enemies even closer. And I do think, that President Trump does have some expertise in understanding, dynamics between people and whether or not you agree with his tactics. And I do wonder, is he on some level, I think about your expertise as a, national intelligence officer, working in the State Department, is there on some level important to have some kind of relationship with a leader like President Putin because he is such a dangerous enemy?
I think it is. And I think the problem is the U.S. cut off all high-level contacts with Russia after the war began. And that didn't really help the Ukrainians that much. And it certainly didn't change what Putin was doing. Now, I'm not going to say the inverse of that. Now, if we reestablish relations with Russia, we have closer contacts, that somehow what Russia is doing in the war with Ukraine will change. But I think in general, it's the other nuclear superpower, and you do have to have contacts with Russia. It just depends how you negotiate them.
Angela, I can't believe that, as Tim said, here we are, and how many times we've talked with you about, is this, are we closer to an end? Do you see an end coming? Your book, Putin's World, Russia Against the West and with the Rest, is it still Putin's world?
Oh, I think in many ways it is. And I think during this war, Russia has managed to increase its influence with a number of countries in the global south. The BRICS have now expanded to include a number of new countries. The relationship with China has strengthened. It's not only his world, but I do think that his world now has expanded. And I think if the U.S. and Russia now reestablish ties going forward, and maybe even economic ties, I don't know, then I would say that his world has expanded, and he is getting the recognition that he seeks, that Russia is a great power, even though its per capita GDP is about the size of that of Spain.
Well, so that raises the question, how is he viewed inside his own country? Just 30 seconds left.
Well, I mean, I think the people who really oppose him, most of them have left. That doesn't mean some of them there still don't oppose him. But I think the majority of Russians have tuned out the war. They think he's doing a good job, and they believe that the West is their enemy. So it'll be interesting to see if the U.S. and Russia restore ties, whether the state-run media there are going to change their narrative.
All right, another masterclass on Russia and President Putin. Angela, thank you so much. I always appreciate it. Dr. Angela Stent, Senior Fellow at the Brookings Institution. She's a member of the Council of Foreign Relations, also author of Putin's World, Russia Against the West and With the Rest. So really just a great snapshot of what's going on here.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Well, global stocks have become the most popular asset class with investors who are showing the biggest willingness to take risk in 15 years. This is according to a survey by Bank of America. Fund managers' cash levels fell to the lowest since 2010, while 34% of participants said they expect world equities to be the best performing asset in 2025. This is again according to the B of A survey. And Tim, a net 11% indicated they were underweight bonds.
Well, our next guest likes stocks outside of the U.S. as well. And he likes more, too. Joining us once again, Jimmy Lee, founder and CEO at Wealth Consulting Group. We've got over $8.5 billion in client assets under management. Jimmy joins us from Las Vegas. Jimmy, is this the year where the U.S. underperforms ex-U.S.?
Tim, Carol, great to be talking to you. And I am not sure about that. I mean, international stocks, developed markets have started out really strong this year so far, better than the U.S. a little bit, but I'm not sure if that's going to continue to play out throughout the remainder of the year. But we do like international stocks. I do think from a intermediate term perspective, the dollar should come down as rates come down, and that should be the big variable. But there's a lot of uncertainty about what's going to happen with rates and what the Fed's going to do. I happen to be on the side that believes inflation is going to come down. I've been saying it for a while on your show, but the inflation is going to come down a little bit more, and I think the Fed's going to cut more than what's predicted right now.
So wait a minute. So, if you take a look at something like the MSCI Developed World Index ex-US, it's up about 8% year to date. So that's double the return of the S&P 500. So finally. And so as you noted, Jimmy, like we have seen a strong start from some of those overseas markets or non-US markets. So let me ask you first, though, if you were going to put some new money to work, where overseas, even if you don't think it overall is going to outperform, would you put some new money into non-U.S. stocks at this point? And if so, where specifically?
Well, sure, Carol. I mean, we in a broad asset allocated portfolio, we're going to have a certain percentage of our equities overseas. And right now, actually, I think that there's a lot of value in some of the areas. I wouldn't say necessarily, I would stay away from certain countries like China, for example. I would have less exposure there. But, in Europe and in other areas, I think you got opportunities to buy companies at a much better valuation with fresh cash. But I still would be a little cautious as to getting a little bit, too excited about taking all your money out of the U.S. and putting it overseas. I don't think we're anywhere near that point yet. But can other areas that diversify an equity portfolio perform better this year than it has in the past, including domestic, small cap, mid cap stocks? I believe the answer is yes. You started to see so far this year, returns from sectors that have not been in favor as much, and materials that we've talked about, financials, industrials that are doing better, healthcare, the consumer staples sector is doing better. And tech's up, but just a little bit flat. Consumer services, obviously, or communication services is doing very well with the Meta, Google leading the way, Netflix. And I think that buying those kind of companies on the dip makes sense. But we are starting to see this rotation, right, that we've been talking about for a long time. And I think investors are looking for more value because there's a lot of uncertainty with tariffs, maybe slowing down the economy. I wouldn't be surprised if we get a little bit of a correction. And if we actually get a real correction, I would be a buyer on those dips.
How big of a correction for you to buy?
I mean, even if it's a few percent, Tim, we've been putting cash to work. But I'm not sure if we'll get one. But I think it'd be healthy for us to get a nice 10% pullback at some point. Nice, not sure exactly how we end up there. But if we were to get that, I think that I'd be a little bit more aggressive. I also think that bonds really haven't participated yet. But at the end of the year, I think interest rates are going to be lower. So this year, I think for most investors that are allocated between equities and fixed income are going to do pretty well. Again, we've been cautioning not having too much money and concentrated in the big growth tech names that everybody's been invested in. So we've been cautioning investors about that. But if those stocks end up up positive, but maybe not as well, at the end of the year, if the S&P 500 does 10%, the Max 7 does less than that, I think other parts of the market can do way better.
Forgive me, it sounds like you like a lot of the market. Some international, some big tech. It does sound like you like a lot. Is that true that you're kind of just broad in terms of the equity universe, be it U.S. and even outside the U.S., find a lot of opportunities? Or am I misreading you?
No, you're reading me right. I mean, and especially right now, because there's a lot of uncertainty out there, right? With rates, what the Fed's going to do, with tariffs, wars. I mean, there's a lot of stuff in the air right now that investors are contemplating. But I think the two big themes that I'm focused on is deregulation down the road and lower rates. I firmly believe that inflation is going to be a little bit lower than what people are thinking. And I'm not in the camp of where I think the consensus is certainly now that inflation is going to be stickier and that the Fed could reverse course next year and actually
why do you think
rates.
Why do you think that's the case, that you don't think inflation is going to be sticky?
I think we're seeing slowdown in certain areas. I think that the revision in the retail sales numbers you just announced on the commercial before the break here, or on the break, about Southwest Airlines, with layoffs, and you're starting to see other companies with the layoffs. You see what's going on with Doge and government employees. That's all going to hit down the road. And again, I also think that we've gotten, while necessarily the housing market hasn't, crashed or come down at all, prices are still pretty high, but they're not going up like they were before. And I think that's going to get into the headline data. So the Fed just needs more reason to move rates lower. It's not there yet, and we know they're data dependent. So just like when they were predicting, so many rate cuts before, and the Fed's fund futures and what they were saying they were going to do, and that dramatically changed now to where 1 to 2 cuts maybe, or 3 cuts maybe. I think that we could be on the higher side of that in 2025 and beyond. And so that's why I'm more bullish on the cyclical sectors, including materials and things like that.
So you're thinking 3 rate cuts for the year?
Maybe even more, Tim. I mean, we'll see. It really is data dependent, as we know.
Well, does the data, Jimmy, then say recession, and that's why we get the rate cuts?
And I think that's why people are bullish. So I don't think that we're going to get a recession. I just think that the Fed needs to be ahead of this. And before we get too much softness in the economy, they need to lower rates.
All right, we're going to leave it on that note. Jimmy, good to check in with you. Jimmy Lee, founder and chief executive officer of Wealth Consulting Group, joining us from Las Vegas. Again, they've got about $8.5 billion in client assets under management.
This is the Bloomberg Business Week podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, everybody, you know this. It's been a bad start to the year for air safety in North America. The latest incident happening yesterday as a regional jet operated by Endeavor, that's a wholly owned unit of Delta Airlines, flipped out of control after landing and skidding along the runway before coming to rest upside down. Delta resumed flights at that Toronto airport today as investigators continue to sift through the wreckage. Delta shares, we saw them a little bit lower in today's session, but I think a little bit more selling earlier on, but not necessarily right now the case.
We should know that nobody was killed in yesterday's
Correct.
accident. And at last check, 19 of the folks who were in the hospital have been released. Joining us now to talk about this and the latest spate of airline accidents is Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst George Ferguson. He joins us from Bloomberg Intelligence headquarters in Princeton, New Jersey. George, the video, the latest video that I've seen of this actually happening, this plane landing and then appearing to flip over, it boggles the mind, something that looks absolutely unbelievable. What do we know about how this happened?
Yeah, so what I'm hearing from reports is it sounds like there was a pretty hard landing, that the pilot perhaps didn't even sort of flare the airplane, which is typically where you pull the nose up and you bring the airplane, you slow it down, bring it closer to stall speed before you put it on a runway. And so it seems to be that the force of the airplane hitting the runway, it bouncing, and then I don't know if either wind got underneath one of the other, the wing because of the gusty conditions, but then flipped the airplane over and put it on its top, I guess. Again, it looks, to me, it looks like pilot error. I don't think there's anything that has any correlation to what's going on in control towers or anything like that. And it's a challenge because at these regional carriers, you have some of the youngest pilots doing the flying. So that's part of the challenge, is training there.
One of the things, and George, we've been thinking about talking to you for a while about this. You had yesterday's incident or accident coming after 10 people died aboard that commuter plane that crashed in Alaska. That was earlier this month. That was after the late January accident, in which 67 people died after the regional jet operated by American and a military helicopter collided midair at Ronald Reagan National, Washington National. And then days after that, you had the medevac plane crash after taking off in Philadelphia. That killed 6 people aboard and 1 on the ground. And then you had a private jet veering off a runway in Scottsdale, Arizona, and then into another plane on February 10th, killing the pilot of the smaller aircraft. Is it all just coincidence? I mean, do Americans need to be worried about flying? We talk about the crowded, skies, but I'm just curious, do Americans need to be worried about getting into a plane?
So I'm going to focus largely on the commercial incidents,
Fair.
right? And I think that, one, I think flying is still much safer than a lot of the other activities we undertake for transportation. But there have been an uptick in incidents, close calls on the commercial side. We've seen other situations where airlines have pilots landing on taxiways, right? And so, I can speak to this part of the business because we get more data on it, the commercial side. And we know that in the pandemic, a lot of pilots retired, might have been given packages. And so there's been a pretty big turnover in the pilot ranks. And I think it's, there's a lot of it throughout aviation. We've seen that in the factory workers. We've seen it in the tower workers, the controllers. And to the pilots specifically, right, there was a lot of experience that left. And now that's sort of pulled up more junior people into the airlines. And this airplane, right, an Endeavor airplane flown for Delta, that's going to have some of the more junior crews, most junior crews in commercial aviation. And the challenge now is with this big turnover in the workforce, you've got to get a lot of training into the workforce because they're much more mobile now. They're moving through the different positions that they typically hold in a career much faster, and maybe not be getting as competent as they should be. And that's what concerns me here.
Hey, George, we only have about a minute left, but our Bloomberg government team reporting that congressional Democrats are using the layoffs at the FAA and the recent slate of plane crashes to make their case that the Trump administration cuts are going too far. Should we be concerned about layoffs at the FAA?
I think it's too early, right? I think that this just started at the FAA. I think whatever you're reaping now is what's been built over the last number of years, right? And so I'd be concerned if cuts were coming from the wrong places, but lots of places in government, there's typically a little bit of excess.
We know hundreds of probationary FAA employees, Carol, were fired over the weekend. That's the move that's drawing quick backlash from members of Congress.
Yeah, certainly another layer on top of all this. George, though, good to get your insight as always. George Ferguson, who understands this space, Senior Aerospace, Defense, and Airlines Analyst at our Bloomberg Intelligence team out there at BI headquarters in Princeton, New Jersey.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, just about 18 minutes left to go in the Tuesday trade. Carol Massar, Tim Stenovec, live in our Bloomberg Interactive Broker studio. We are higher on the S&P 500, but it's not even a full point.
Not even. I mean, what's everyone doing today? What's going on here?
I don't know.
It's orange, Carol.
It's orange?
It's orange. It's not green. It's not red.
How come mine's green? How does yours go orange?
I don't know. That's so weird.
You'd be looking at a different
Do
screen.
you go to WEI?
No, I have my own little
Try WEI. See if it's
custom
orange.
screens that I look at.
This is the intricacies of the Bloomberg terminal. Many ways to look at something.
Yeah, right now.
Orange? Now it's red.
No, red.
You were in time.
Red. Okay, I'm going to look for orange.
Okay. Hey, let's see what Lance Cannon has to say. He's portfolio manager at Hood River Capital Management. Lance, good to have you join us for our drive to the close today. Kind of a day in search of direction, but it really masks the bigger themes that are going on here. We haven't really had a chance to catch up with you to talk trade and to talk tariffs. So that's exactly where I want to start. How are you thinking about a potential trade war?
That's a great question. I mean, I think that it's on a lot of people's minds right now as well, in terms of like, where do we go with this? What could potentially happen? When will it happen? If it does happen, and how does it then potentially impact not only this near term, but also the long term as well? The way that we've been hearing and talking with our companies about it is that they're planning for the worst and hoping for the best. So the way that they've been doing that over the last couple of years, ever since Trump was in office the last go around, they've been diversifying their supply chains, looking at other ways in which they can supply their own products, and looking at ways in which they, should that ever happen again, they don't get kind of stuck with one tariff that then they have to pass along to the consumer and push prices up. And so a lot of companies right now are actually having that conversation about, hey, where can we be? How can we make sure that this happens, and diversifying that supply chain away? So regardless of whatever does happen, they can be best prepared for it.
We should point out, too, your Hood River International Opportunity Fund, and correct me if I'm wrong, I think about $63 million in assets under management, roughly?
Yeah, we're just about 65 billion in
65 million or
yeah,
billion?
We're excited.
65.
Yeah. Well, I would love a billion, Carol. If you happen to know anyone, just give them my number.
Want to make sure I heard correctly. And
yeah,
it looks
65 million.
And it looks like your 3-year return on average annually, almost 10% a year. Remind us about the fund, the strategy, and maybe where it leads you to.
Sure. So we're a small cap international non-US fund. We're primarily looking at companies that are be growing, let's call it 15% plus or more. Depending upon the area, that might be differ to a degree, but we're trying to find the companies that are growing within their industries or sectors with good quality management teams that can invest with over time, and that we believe are going to do better than what expectations are laid out there at this time.
And how
a good name, I think.
Yeah. And how often
ahead.
are you buying, selling in terms of the holdings?
So we're long-term investors. We're looking for 18 to 24 month time frames.
Okay.
That being said, our strategy is built around the idea that things are not just linear. In small cap world, they tend to be up and down. And so we want to make sure that we are properly sized in every position, regardless of what's happening within the marketplace or what's happening within that company. And so the way we think about it is on an every quarterly basis, we're trying to find the companies with the biggest information gap. And when I say information gap, what I'm talking about is the idea that as we do our work, we identify our own estimates, and then we compare those relative to what expectations are out there on the street. And then if it's a positive number, meaning we have a higher number relative to the street, that's a positive information gap. And that's where we want to be largest positions within the portfolios, those names that have the biggest information gaps on a quarter by quarter basis, with the idea being that over the 18 to 24 month time frame, that information gap is going to be recognized as the companies that tend to be small and less covered tend to start to show out these opportunities that they've been presenting to us and that we're finding on the ground, and then the market then reflects that, and that's how we generate the alpha that you mentioned earlier.
Well, let's talk about a couple of those companies. I want to start with Kornit Digital. This is an Israeli company. It's got a market cap of about $1.2 billion. Not a great day today, down 7.4%, down this year by a little more than 17%. Where's the information gap here?
Yeah, so basically last August, the company started a new program that they call AIC. And basically what they're doing is they sell these printing machines to the largest brands in the world. So they're making shirts like the one that I'm wearing, T-shirts that maybe you guys might wear on your off days, et cetera. And they're then selling these machines to these companies And in the past, those machines were they still are. They're still very expensive machines. They're $1 to $2 million per machine. As interest rates have gone up, it's become more difficult for them to sell those machines. So what they did is they created a lease program, essentially, where they'll lease the machine back to you. In return, you promise them a minimum amount of product that you're going to run through that machine, or payment that you're going to make to them on an annual basis, and they'll sign up for a 3 to 5 year time frame. They started this program back in August. The company had been experiencing declining sales numbers for a handful of quarters through that period. Just this last quarter in Q4, they just announced their first revenue growth number for the first little bit. And we think a large part of that as to why they are seeing that growth again is because of this AIC model they've implemented. Not only does it provide them with some assurity around what they're going to do, but it also provides them with visibility into the future. So for every machine that they lease out, they've got a 3 to 5 year kind of time horizon that they know how much at a minimum they're going to be getting on that one machine. And then the client, they're not having to put up this large amount of money up front. They're able to get the machine in. They're able to have the best product for their customers and for us as consumers at the end. And so it's kind of a win-win scenario. And we think that's going to be the main driver here in terms of revenue growth going forward. We think it can push them back into the double-digit growth rate. And at the same time, expand EBITDA margins at a pretty fast rate, given that there's a higher amount of visibility. They can adjust their fixed costs appropriately to make sure that they can meet those targets.
We should point out the stock was up about 61% last year, and so far in 2025, down about 17%, team.
That's me.
That's you.
Okay, let's talk a little bit about Capital Power Company, CPX. It's a utility company with power generating facilities. What's appealing to you about Capital Power?
Yeah, so most of the time when you talk to growth funds, you're not going to talk about utilities. These tend not to be high growth companies by any means. But I think what's exciting about this is what they're doing. So this is a company headquartered in Alberta, Canada, or up in province of Alberta. They've got a lot of opportunity to develop data centers, and they've got a lot of power. The natural resources they need, the environment, the weather is very favorable for this type of thing. And they've got, more importantly, a government infrastructure or a government that wants to bring this stuff in. So they've talked about trying to get up to $100 billion of investment in data centers in the province over the next 6 years. And if they're able to do that, then Capital Power Group is going to be the one that's going to be supplying a lot of that power. We're pretty excited about that opportunity there. They've got the space, they've got the land. We believe they're out marketing it right now to some of the largest hyperscalers in the world. And we believe that those hyperscalers are actually pretty interested in this space, kind of given the natural resources, the weather, and then also the cheap power that will come along with it, given the natural gas that they have right there in their backyard. And so while the actual business itself is what it is, right? It's a utility company at the end of the day. They've got some opportunities to increase pricing on the let's call it the traditional side, but then also you got this free option, if you will, on the data center AI play, which is very hot these days.
Lance, we got to run, unfortunately, but always great when you join us. That is a $7.6 billion Canadian market cap company. Do appreciate you taking the time. Lance Cannon joining us from Florida this afternoon, portfolio manager at Hood River Capital Management.
This is the Bloomberg Business Week podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.